Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to calculations of return on investment, total asset turnover, and profit margin. Get ready, because it's time to take a stance with corporate finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into our worksheet into the blue area on the right-hand side. We're going to be using some of these similar calculations and ratios we saw last time, but we're going to be adjusting the order of them. And by doing so, we're going to practice basically the relationships between these types of ratios. So now we're going to use similar ratios, and we're going to be backing into some of the same information we saw in the prior presentations with those ratios. So we got the data then, the assets, the assets turns over per year 3.4 times, so that's the total assets turnover. And then we've got the return on assets, or the ROI, the return on investment, assets being the investment, of 14%. So what we want to do then is we want to calculate all these items, including the sales item, the net income, and the profit margin. Those are going to be our calculations. Now, oftentimes you'll see this in a book problem kind of calculation if they're going to give you a book problem with this information. Oftentimes what you want to do then is if they give you basically what you would normally think of as the bottom line or end result of a calculation for a particular item, is to write out that item and then look for the unknown that's going to be there. And that'll help you to give you the pieces of information that you will typically need in order to get to the final product that they're looking for. So in other words, they gave us the assets, right? So that's a straightforward, that's a component that we would think of in a calculation, not an end problem. If they give us the assets turns over per year, that's the total asset turnover. So for that, I might say, hey, did they give me enough information for me to complete that full calculation for everything that's going to be involved in the total asset turnover, which would include revenue or sales? So we'd have revenue or sales, which we don't know. That's an unknown. I'm going to make that yellow to indicate that unknownness. And then we've got assets. So then we have the assets, which are going to be equal to the 8,410,000. That's why they gave us that. And then we know what the total asset turnover is. It's going to be 3.4. I'm going to format that cell, go into the home tab, the numbers group. We're going to increase the decimals to indent that cell. This will be then the total asset turnover. So total asset turnover being the 3.4. So now we can back into what we're going to need. We're going to assume, okay, I need the sales number. I can pick up that sales number because that's going to be the unknown that we have. So, and you could see this happening in practice where you're comparing this to another investment where you're saying, hey, the asset turnover on this investment is 3.4. So if I had this many assets and the same assets turnover, right, which is how efficient basically you're using the assets in essence, a rough estimate of what your sales would be, you could see how you might use this total asset turnover once again to calculate the sales for different types of investments as well. So you might two ways to perceive these are: one, from a book problems perspective, if they give you something to work into with the data, what are likely the ways they're going to ask you to do so, and two, of course, in practice, when might you use this data, the total asset turnover, when you're comparing, different type of investment scenarios that you might be working with. So then we're gonna calculate the sales, which you can do your algebra now, which would be x minus, or x divided by the 8410000. So that would be it. I'm not gonna do the math, and that's gonna be equal to, let's put the equal signs, equals 3.4. Okay, so there's the algebra. You can do that algebraically. I'm not going to do the math here. I'm going to do it with the goal seek, keeping on practicing this goal seek thing. To do that, I'm going to delete this number down below. I'm going to say this equals up to the sales item divided by the assets. That's going to be 0 for now, and then we'll use the goal seek. So we will use the goal seek by going to the data tab. Notice I'm not actually on the yellow field here. We're going to go to forecast. We're going to go to the what if analysis and then goal seek. And then we're going to say, I would like to set this cell to be what we think it should be, which is that 3.4. And we want you to do that by changing the yellow cell. So change the yellow cell to whatever it needs to be to adjust that bottom line number to 3.4. We'll say okay. And there it is. So it'll calculate that for us. And then we could double check it here by doing the division. I'm going to say, all right, if I take this number divided by the total assets, we get the 3.4 there as well. Now, if you get something different, you might need to format it by going to the Home tab and adding decimals. So I'm going to put an underline here. We're going to say, okay, so now we've got our total asset turnover. We got our sales. They also gave us the return on investment or return on assets. So you could, whether you're thinking about the initial investment being assets, which is also, you can think of it as an investment, right? So they gave us the return on investment. So let's calculate that. And again, I'm going to calculate, given the full calculation where the end result will be the return on investment. That would be the net income, which we don't know. So I'm going to make that yellow. So I don't know the net income. Then we have the assets. So the assets should be a plural here, I suppose. And that's going to be equal to the 8,410,000. And then we're going to have the return on assets or investment of the 14%. So I'm going to be picking that up. Let's make that a percent. Go into the Home tab and the numbers group and making that the 14%. So then, once again, I can write it out algebraically now and solve for the unknown, which is net income, by saying x divided by the 8410000 is going to be equal to the 0.14, the 14%. So I won't do the algebra. I'm going to use goal-seek once again to calculate this out, to practice that tool. So I'm going to delete this. This equals this cell divided by this cell, and then use the goal-seek, which I'm going to go to the data tab. We're going to go to the forecast what-if analysis goal-seek, and I'd like to set this cell to be the 0.14 or 14% by changing this cell. And then we'll say OK, and it'll find the net income. So that now we have the net income. So once we have that, then we can basically calculate our profit margin percent down here. So also note that we could do these items algebraically, and this is the way you might first have thought about doing this. You might first have thought, well, I need, if I'm going to calculate the profit margin, I'm going to need the net income. The net income, which let's say that is unknown, and we're going to need the sales. So you might have said, okay, how can I use these numbers to calculate the net income and the sales, which could be the last thing that the problem is going to ask for. And you might then try to calculate using a straight down method, the sales calculation, by kind of reversing or doing the algebra here. So in other words, I would recommend you first use the calculations that they have, and it'll basically use back into what you need, right? And then if you were to do the algebra, you would basically come up to the sales item, which would be assets, is going to be now equal to that 8410. We've got the total asset turnover, which we already knew was the 3.4, and then that'll give us the sales. I'm going to make this a decimal. Home tab, add a decimal, and then this is going to be equal to this times the total asset turnover, and there we have it. So in other words, notice I found this number by basically reworking the algebra, but your tendency will be to try to think of this calculation kind of algebraically in your head, rather than just writing down the formula that you already know, which is this calculation, and then solving for the unknown. So instead of doing this in your head, if that doesn't come to you, and kind of panicking and thinking about, well, how does that, I would write it down this way, which is the way I typically see it, a vertical calculation like this, and then algebraically on a piece of paper, and then, do the algebra for it. Similarly, you have this item. I'll add an underline and a double underline here. We have the net income calculation, which could be then the assets times the return on investment. So the assets being that 8,410,000, the return on investments, that 14%. I'm going to make that a percent. Home tab numbers, making that a percent, and that would give us our net income. And that's going to be equal to this times this, and that there's our net income, which we calculated this way. So again, you might be inclined to think in your mind, how can I get to this equation first how can I think about it in this format instead of just writing down the ROI equation, and then converting it to using algebra to the unknown to figure out that unknown. So let's go ahead and underline this. And obviously these two are basically just working the algebra here as well. So we'll underline this, and now we have the numbers we need for the profit margin calculation. The profit margin is going to then be equal to the net income and the sales. We're going to divide those two out, and that's going to be the profit margin. And this is going to be equal to this number, the net income divided by the sales. We're going to then add the percent here. So let's go Home tab, numbers, add the percent there. We'll add some decibels. It might not be perfectly rounded. We'll round it to 2. Let's round it to 2, standard. And then I'll put an underline here, and we'll put the double underline there as well. So there we have it. Now, so the bottom line of this, of course, is with whether you're in practice or you're doing book problems, it's not going to be enough to just understand the formulas to get down to the bottom, line. You can't just memorize, well, total asset turnover is going to be the sales divided by the total assets, and then every time they ask a question or every time you use this, it's going to be in that format. No, we're going to have to need the relationships. We might need to back into certain components of these items. And the better we understand those relationships, then the better understanding we have of the relationships on the financial statements, meaning we have a better understanding of what the financial statements are saying, and then we can use them better. So we'll keep on practicing, kind of working around these ratios. You got to kind of learn the ratios, learn the main ratios, and then practice just using them. So we'll keep on expanding on these ratios and trying to work with them in relation to each other.